School of Stocks. I'm your host, Victor Dungo. Today we shall be talking about price ratios. Remember the last time we spoke about return on investments, return on equity, the return on assets. Today we shall be moving a step further in discussing the popular price ratios. There are majorly three kinds of price ratios. One, we have price to earnings ratio. Two, price to book ratio, PB. Price to sales ratio, PS. To really understand what this means, let's go back to our analogy of the cake. This is our cake. So we have actually sliced this cake into 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 shares. So this is the company having 10 shares. Let's assume that that company in year 2018, the company had a sale, also called revenue, of $200. We have also what you call net income. Net income is what you call your profit. Let's say they have $40 of net income. This you will find in your income statement. So we are going to answer the question of price to earnings ratio. Before we do that, we need to perform a trick. That trick gives us what you call earning per share. Earning per share is your net income divided by total number of shares. What this is trying to do is to establish the performance of one share in this net income of $40. So you are trying to attribute the net income to individual shares. In this case, we have 10 shares. So we are going to split this net income of $40 into 10 places. So whatever we then have is going to give us earning per share. Oh, in this case, we have $40 divided by 10 shares. So this is going to give you $4 per share. That is what earning per share means. For you to remember what earning per share is, it has to be in dollar amount per share. That is what it is. Now, if we then want to get our price to earning ratio, let's assume in the open market, these 10 shares are worth $50 per share. So it means that the whole of this company is worth $500. Now, if you try to compare the price you pay for one share to the earning attributed to one share, what you get is the price to earning ratio. So it means in this case we have $4 attributed to one share in profit, but in the open market you can get a share of that company for $50. So your price to earning PE ratio will not be price per share, earning per share. So what is my price per share? $50. What is my earning per share? That is $4. If you then work this out, what you are going to get is roughly 12.5. This does not have a dollar sign in front. It's just a ratio. So the price you are buying a share for divided by the earning or the net income that is attributed to that particular share. So it means that for the $50 you have bought a share for, what you are getting is $4. And in comparison, it then means that for every $1 of earning, you are paying about 12.5 times that earning. So this is what you call price to earning ratio.